What's up, everybody? If you're into commercial real estate investment, if you're into real estate in general, if you are into money and finance, then you're in the right place. Welcome to my channel. My name is Cornell Dane, and you're tuned in to Real Estate Money Media. And today's topic, as you might have guessed based on the lower third, is around the unconventional, right? How do we identify the things that are hidden below the surface, the things that not everyone is aware of? Um, the things that everyone's aware of, right? We're all aware of GDP. You know, it's kind of a lagging indicator, right? By the time everybody knows about what the GDP number is, or the unemployment rate has become, or maybe even the interest rates, it's already too late. We kind of want to figure out the things that are flagging change, that are kind of insinuating that we're going in a different direction. And so that's what I'd like to talk about. I'd like to talk about something called the iceberg theory. Okay, the iceberg theory. And as many of us know, much of what is known is always smaller than what is unknown when it comes to icebergs, right? For the most part, what is beneath the surface is always much, much larger and much, much bigger than what we see above the surface. However, many of us, many a times, we tend to give a little bit too much credence and credit to the thing that we can't see. And we're kind of, in many ways, dependent upon the things that we can see to elucidate and illuminate the things that we can't, which is impossible, right? So I'd like to discuss some of the ways in which we can use or begin to build a narrative based on the things that we can't see, and identify first the things that we can't see, some of the trends, market trends that may be burgeoning or emerging, and then develop a narrative that can positively impact our real estate decisions going forward. All right. So, like I said, we all know the KPIs, right? And those are still necessary when comparing properties. But how do we identify those emerging markets? How do we do that, right? So I'll give an example of something that I think is important, or I think would be a good example of where you might have made money. And then I'll give an example of something maybe that's yet to come, right? So the first one, in real estate, right? In my area, we've got all these data centers, right? They're just springing up. They're chewing up, sucking up almost all of the industrial space available, right? And so one of the opportunities being that these data centers are almost like servers, right? They're a lot of the internet is running through these data centers, and that's their job. Store information. Some of that information is extraordinarily top secret, private, etc. Some of it's just obviously it's I'm running through one of those servers right now. So one of the opportunities that one could have foreseen maybe a couple of years ago would have been cybersecurity. That could have been something that you might have invested in the stock market. If you in fact had a company or were into cybersecurity, you might have been first in line to get some of those contracts. That could be another way that you could have taken advantage of the emerging trend, market trend. Another thing that maybe you could have done would have been to have figured out sort of like the ancillary businesses. So data centers need security themselves, not just the information inside the building, but the building itself might need a degree of security because maybe there's a terrorist who has identified that this particular building is responsible for something. Maybe it's a top secret thing, and they got some top secret information. If you knew that, you could harm the building, right? Well, if someone were to come in and say, "Look, I can protect your building. I don't know what's in the building," because really your business is not predicated on one building. You're just guessing that there's one of these buildings or a number of these buildings are highly, highly important to certain government activity. And so what you would do is you might build a business around just that, the security of the buildings. That could mean, men, staff. That could also mean cameras, LiDAR. That could mean a number of things. But you built a narrative based upon this new burgeoning kind of sector of data centers. And out of it, we've got a little more cybersecurity, or we've got some cybersecurity that we didn't have or need before. Maybe we need more of it. And you've also got maybe just regular armed security that needs to be present on site in order to protect this building. And so how does that factor into commercial real estate? Well, if you are a broker or if you own buildings, then we've got a concept called clustering. And clustering it can mean that a group of people in a district sell the same thing, but it could also mean that everybody in that district is kind of supportive of one another. You've created some sort of ecosystem that is self-sustaining. And if you know or have built a narrative around, using this iceberg principle, if you've built a narrative around the data centers, then maybe you start to contact for your new tenants. You start to say, "Hey, I know that X, Y, and Z is going on. I want you to come and be a tenant in my building because I know that you're going to need space in this area, and I want you to come and be in my building," right? That would be one way. Also, you might build buildings knowing that there is an increase in demand for this particular type of asset. Just for the ancillary businesses. You're not even targeting the data centers, you're targeting the ancillary businesses that support the data centers. So that could be one way. There are probably other factors that we could use, and we've got other past examples too. In the 2001 downturn, we had something called the lipstick index that emerged, where basically we learned that during a downturn or a recession, people are going to not stop buying luxury items, but they're going to basically step down in the type of luxury items that they buy. So that was something where someone had to say, okay, well, these retailers are going to be more in vogue during this time period than these other retailers. You see? So it could have been a 5-year bet, it could have been a 10-year bet, but it was a shift in the market that one had to notice in order to be aligned with the new direction that the market or the economy was going. So these are just a couple of ideas that I'd like to throw out there. I'd love to hear what you have to say about it and what you think about this concept. Again, my name is Cornell. This is Real Estate Money Media. And feel free to like, subscribe, and comment. And I will see you in the next video. Peace.